This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors, whether you're a veteran or brand new. I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. This is episode number 361, and my guests today are husband and wife team, Jon and Stacy Bichelmeyer, good friends of mine for several years now. Jon and Stacy are investors out of Kansas City. They're doing around 60 to 70 deals a year. Now, when the last downturn happened in the market, their traditional funding dried up, and they needed to find another solution to finance their fix and flip deals. So they started to raise private money from people in their network, from friends, family, neighbors, people at the gym, word of mouth, anywhere they could find somebody that would be interested in potentially working with them. So now they have more funding than they typically need, and which means really a reliable source of private investors with very simple terms to ensure that they never have a challenge funding their deals again. Today we walk through their program. They discuss lessons learned, some mistakes they made, and if they had it to do all over again, how they would do it right. We discuss how you, the listeners of this show, can really emulate their model if you need private money. So let's talk about how to raise private money for your real estate investing business in today's show. Please help me welcome Jon and Stacy Bichelmeyer to the show. Jon and Stacy, welcome to the show.
Hey, thanks, Mike. Thanks for having us.
Yeah, thanks for having us.
Yeah, good to see you guys. So we've been friends for, I think, 3 years. We joined a mastermind group right around the same time, right?
Right.
I think so.
I think, yeah. And you guys are up in Kansas City. And a husband and wife team, which it always clicked with me because my wife and I are a husband and wife team, and so we kind of like watch each other to see how do we run this business and like not destroy our relationship with our spouse.
Exactly.
There are a few challenges sometimes, but I think we have more good days than bad days. So
yeah, and you guys have done a good job too, and I know kind of like Lindsay and I, where you figure out how to, split up the business where it's like, this is what you do and this is what I do, and I don't really know how to do what you do, and I'm not good at it, and you couldn't do what I do, and it just kind of makes sense because you have different skill sets, right?
Right, absolutely. I'm kind of handle like the money and the organizational stuff within the office and make sure that that's running smoothly. And
I'm out in the field. I do all the buying and oversee the selling and the rehabs and all that stuff. So you're exactly right. So we both have our areas of expertise, and I don't necessarily care to how she does her stuff, and she probably doesn't necessarily want to know how I do my stuff. Yeah. So it's good that we can come together and, hey, I need help with this or I need help with that. And then we can, work together and figure out whatever needs to be taken care of. But yeah, we each have our defined roles, so to say, and that makes things flow very good between us. So
absolutely.
Yeah. And even, I talk a lot to people that are partners, or we coach people that have partners, and it's really the same thing. Even if you're not a husband and wife team, you have to find a way to have distinct responsibilities. Otherwise, if you find, you've seen people that have relationships that fail, like partnerships that fail, right? They have the same skill set. They're working with like their friend that they're just like, but both of them are horrible at cash management or the accounting side or something like that. And that just doesn't work ultimately, right?
Yeah, and if you're both trying to do the same job, then you see one way it needs to be done, and your partner sees another way to be done. And in the end, they'll both get done, but the headaches and stuff that go in between if you don't have defined roles. So we're big workers on that.
And this goes for partners too, but I read something recently about spouses, and it says if you're just exactly alike and you have the same skills, then one of you is unnecessary. And so, I think that's absolutely right. If we were exactly the same, we wouldn't need to be here. So, one of us could be doing something else. So.
Yeah. Well, hey, so I know we're going to talk about raising private money today. You guys have an innovative program that's allowed you to raise as much money as you need to run your successful business up in Kansas City. So before we kind of dive into that topic, tell us a little bit more about your background, how you got started in real estate investing, how you made the decision to work together, what you did before that, and just I guess kind of the history of how you got to where you are today.
Okay, go ahead.
Okay. Well, believe it or not, I was a butcher. My grandfather had started a local family meat company. It was called Bichelmeyer Meats. And so I grew up as a little kid and up and through high school, and I was a butcher. I worked at a meat market. And my grandpa, I always thought he made a very good living in the meat business. But he had told me a couple times he had made as much money in real estate as he ever did in the meat business.
Okay.
And I tried the meat business for a while, and it was okay, but I was ready for a change, and so I left the family business and went on my own and started doing some real estate. So I like to think I'm a third generation real estate investor. My grandpa did a lot. My dad was doing some commercial stuff, and we worked together for a while. And so just kind of learned as I went from there. So,
and John, is the family meat business still around?
It is. It's still the old-fashioned meat company. So
yeah. And is that not to get too personal, but has that like had pressure on it? I assume from like the Costco's of the world and all these kind of like all these things that probably put pressure on those historically mom and pop type businesses that were specialty business. I would assume, is that safe to say?
Well, it's kind of a staple in Kansas City, and it's a little bit of a specialty store. So a lot of people will come. Barbecue is obviously really big in Kansas City, and you want the right meat, you go to Bichelmeyer's to get it. It's one of those kind of places.
Yeah, so I think they've seen a little bit, but they've got their niches and certain things that they do that they've been able to hold on and to thrive in some areas.
Yeah, so. That's great. That's good. That's good. Awesome. Yeah. And so go ahead, Stacy.
I was going to say, so when I met John, he was doing a butchering a couple days a week and getting into real estate. And he had been doing that for a few years. And then by the time we were married, he was full-time real estate. And I used to be a chemistry teacher. And after we were married about 3 years or maybe 4 years, and I'd had my second son, and I was done teaching. And about 6 months after he was born, I said, okay, do you need help? Because I'm ready to do something again. So I've been working with John for about 14 years, maybe.
Okay,
13
awesome.
and a half years or so.
Yeah, it's kind of funny. I like to joke. Yeah, she taught chemistry. I never took chemistry. So it was kind
of... When you said you were, I didn't know you were a chemistry teacher, but right when you said that, Stacy, I was like, I could see that. I can see that.
She likes she's very good with numbers and likes to analyze it and do different
problem solving
and all that. So it works very well.
Totally makes sense. Yeah. Awesome. Well, so you guys have carved out kind of a niche. I mean, you've done a lot of volume up in Kansas City, and you guys are about how many houses are you guys typically buying a year or a month, just to kind of give some perspective of your volume?
Right.
Sure. We're on track to buy 65 this year, and so we're not going to sell them all. So, I mean, we'll have, probably 120 to 130 transactions. Now, some of them will hold for rental, some of them will retail out, but buying and selling.
That's great.
Total.
That's awesome. That's awesome.
Yeah. I was going to say, I don't know, 5 years ago, we had about 6 rentals, and they were accidental rentals. We didn't think we wanted to be landlords. And as we start looking at long-term lifestyle and everything, we now have about 75 rentals.
That's great.
So we're officially landlords. We're adding about 5 this month, and not quite at that pace every single month, but we added 1 or 2 a month.
Yeah, as you know, awesome. Being in the being in the business, it just changes a little bit. So a house we buy, you might think be a good rental, we end up selling. We have another house we think might be a good rental, or a good flip. We ended up renting it out. So we just kind of let the market, tell us, so we have a couple different exit strategies, and it's a great position to be in. So
yeah, that's fantastic. Yeah, we do the same thing with our rentals. I mean, for a long time, it just seemed like it was a big pain in the butt, and we purposely, I think, kind of like you guys, we're more we have the mindset of being more aggressive to kind of get them paid down or paid off, because that's kind of our nest egg, right? And so. So what happens is when you're doing that, they don't seem to perform as well as they would if you really stretched it out. But the goal is to get them paid off so they perform better sooner than they would otherwise, right? So, but when you start to pay some of them off, and then rates have increased over the years, and you start to see, wow, that house that I paid like $15,000 for is now worth like $80,000, and it rents for like $11.95 a month. Like what? And so once you start to see some of that, you're like, okay, I wish I had kept more now, right?
Yeah,
right.
Yeah. Exactly.
I know. Absolutely.
Yeah. Awesome. Well, so along the lines, you guys started to raise private money, and maybe you could start by telling us kind of why private money versus traditional money, traditional lenders, banks, and other things like that, or hard money lenders, and what was the impetus for you to start going down the private money path? Was it like during the last downturn when a lot of the traditional financing went away, or what kind of caused you to lean in that direction? Are you looking to change your life through real estate investing? If you're interested in either getting started or taking your business to the next level, please check out FlipNerd's private program at theinvestormachine.com. This is the most robust real estate investor coaching, networking, and mastermind on the planet, and designed for your success. If you're ready to roll up your sleeves, ready to take personal responsibility for your own success, and ready to dive into a world-class instructional coaching program that provides you step-by-step instruction to help you achieve financial freedom, then you should apply today. Spaces are limited, and candidates are only considered after an application and interview process. Our 12-month investor program is unparalleled. Think you might be a fit? Learn more today at theinvestormachine.com. During the last downturn, when a lot of the traditional financing went away, or what kind of caused you to lean in that direction?
Yeah, so basically that's exactly right. We had never missed a payment with the bank. We'd never been late on anything. But during the downturn, we had several large lines of credits with 5 or 6 different banks, and basically they all just shut down. Even though we never missed a payment, we were never late. They basically just said, look, we're not lending money in real estate right now. And so we had to figure something out. I had 4 really good deals, and I wasn't going to lose them. And so we basically had to get out of our comfort zone and come up with a program that we had presented to some people so that we could still get these houses bought. So yeah, we got kind of, and it's turned out to be the best thing ever, because we don't have the banks telling us now what we can or can't do with our money that we're borrowing from them. You can't, do this or do that. So we get to do what we want when we want to do it as we see fit. So we don't have to get the bankers okay to put in the new furnace and air conditioning unit, or, put a draw on and have to do all that stuff. So it's really simplified and really made things a lot better. At first, I was concerned, banks aren't lending money more. What are we going to do? How are we going to do this? And hindsight, it's been one of the best things that's happened to our business. So
yeah. What are some of the would you, if you had to list pros and cons or benefits? I mean, some of it is probably less administrative stuff, right? Less.
Absolutely. They're not asking me for financials. They're not asking.
Say that again.
Yeah.
They're not asking for financials, or they're not wanting to, come in and, I don't know what my private business is necessarily. All they are concerned about is that they get their quarterly checks and they have a picture of the property. It makes them really happy. And I know at any given time exactly how much I have, because the banks, sometimes they're like, well, your line now is 2 million. Oh, well, we think now we want to make it 1.5, or, oh, it's going to be 2.5. You just never know what they're going to tell you, because they don't always control it. Somebody else in an office thousands of miles away might be controlling what they're telling you. So it's, I know exactly what I have all the time.
But also it's the ease, we don't have to go to loan committee meetings and all that stuff.
Mm-hmm.
So the ease, and it's a lot less for us versus hard money. We're not having to pay a bunch of points and high interest rates and stuff, and then have a balloon in 6 months or a year or whatever. So the ease of it is a huge thing. The paperwork, a lot less, paperwork, speed, all those things are really good. And everything is handled by the title company. And, so we basically, we had, it's all handled by the professionals. So it's not like they just give us the money. Everything's handled at the title company or the attorney's office. It's all handled by third parties to make sure everything is done properly.
Yeah, so they're still wiring the money to the title company. You're giving them first lien deed of trust. So they have the asset there. But probably, and I don't know this for sure, but you probably have the ability, when you buy like us and you buy at a deep discount, the problem with a traditional bank is that they usually require 20% down, and it's 20% of purchase price usually, right? They equate purchase price to value, even though we know we bought it well below market value. So with private lenders, you're more likely to be able to borrow 100%, right?
Yeah.
Typically we'll just borrow up to 70%. So keeps our investor in a good, safe position.
70% of your purchase price or of ARV?
Of ARV.
I'm sorry, the ARV. Yeah. So we'll give them 70% of the ARV. So if there is an adjustment in the market, or something changes, they're still in a very good position. So they're not
they're well
over leveraged. Yeah, they're well protected and everything.
For sure.
Basically, again, everything's handled by the title company, so they're given no note and a mortgage, insurance, title policy. They're given all the standard paperwork just as if we were going to a bank to do that.
Right.
So,
right. Yeah. And are you doing this? So you have some lenders and you do this like deal by deal. So you got one under contract and you just call up one of your lenders and say, hey, do you want to fund this one for us? That we're going to close on it in a week, or how does that work?
Like I said, I basically know how much I have and how much my lenders have for me. So let's say we buy a property and I determine I need $100,000 to purchase and do the majority of the rehab. And I look down and sure enough, I've got a lender who has that much available. And I send them an email that shows a picture of the property with some description of the property. And I call it a placement of funds, and something that they just sign that says, yes, I agree that my money be put on this property. And I send it to them, they sign it, and they send it back to me or the title company, and it's it. That's all.
Right.
Yeah. That's awesome.
Yes. That's awesome. Yeah. So our private lenders are basically, they'll tell us how much they're looking to invest, and then we just try to match the property that we have with what they have. And then again, everything goes to the title company from there. So that title company basically takes over from there. So
how do you decide?
Like the bank.
In my experience, you guys have a lot more experience with private money. I use a lot of private money from one person, kind of a friend and family member so it's a little more loose than even what you're describing here. But I know that some people have a challenge because sometimes, when you're raising money, you go from like, you can't get enough or you can't find anybody. It's real easy. Probably you would, I think you'd agree with this, to raise way more than what you need, right? Because sometimes you find somebody and they're like, they understand you. They want to work with you. And they're like, well, I've got 1.5 million. And you're like, oh, well, I just need like 80,000 right now. Can you just set the rest of it aside? So you kind of go from, my guess is, and I don't know your experience, but you kind of go from finding some people that have, $50,000 or $100,000 that they could lend to somebody that has way more than that. And then your challenge is, well, which lender do you use, right? I mean, how do you deal with that when you have multiple lenders that have kind of a line of credit for you? How do you know where to go first?
It's kind of a puzzle. There's certain lenders that obviously, if you have somebody who has a lot of money, you want to keep their money active all the time because they put a lot of faith and trust in you. So you want to treat them and you want to make sure they're getting their returns. It's a constant puzzle. And then that's what it is. And say, okay, you have this much. We're going to take a portion of that for this property, and then we'll save a portion for another property that I know will be coming.
But all of our, basically all of our private investors, most of them, we had a few larger ones, but it's, a lot of them will start off with maybe just one property, and then, kind of checking us out, and then, they see that their monthly or quarterly checks come. And then all of a sudden next month we get a phone call and say, hey, I got another 100,000. And then the next month, hey, I got another 75,000 or whatever it may be. And I'll just kind of like joking with them. I said, what, you got a CD come due? And they're like, yeah. I said, what, you don't renew it for 0.02%? And they're like, no, I like the rates a lot better. So it's kind of funny once they come in with us and they see what we do and we do what we say we're going to do and everything, then all of a sudden, we get a phone call. We get a couple of phone calls a month, and we'll just politely take, find out what they have and write it down and say, right now, look, we have, we don't need it right now, but let us know what you got. And if we have something that fits that, we'll be sure to give you a call back. So you're right. We kind of go, right now we got a lot of availability, if you will.
Yeah, we do. And we have a list of people who have more for us. And I'm like, I just don't have the properties right now, but who knows, things could change. And next month I could need to give you a call. Is that fine? And they're always willing to work with us.
Yeah. And to clarify for the folks that are listening or watching, so you guys are using this for fix and flip money, not your long-term rental money, right?
Absolutely. Yes.
Correct.
Absolutely.
Yeah. So for our rentals, basically what we'll do is we'll just go to, we actually office at a local bank, and basically we'll just refinance them through the local bank, and that would free up their funds to go back to our flip business. So it's more that most of ours are anywhere from 3 to 5 years as far as our it's kind of the terms with our private investors.
Our private investors, I'll have 3 to 5 years terms, and then most of the time they get to the end of their term, and I'll call them. I'm like, hey, it looks like you're in the end of your term in 6 months. We're writing this new one, and they're like, oh yeah, extend me another 5 years.
So that's 3 to 5 year terms for kind of the line of credit, right? But your typical house, you guys are probably holding for around 4 months, is my guess, like 3 to 4 months for a typical rehab. Does that sound right?
Maybe 6 months. Yeah.
Depending on the size of rehab, 3 to 9 months. But yeah.
Yeah. Okay.
They
Okay.
basically said, look, I'm going to give you X amount of dollars to, as long as the investment makes sense to them for the next 3 to 5 years.
Okay. Okay. And so, so tell me a little bit more about your program. You made some comments about it. So how do you position it to investors? How do you we'll ultimately kind of get into how you find the lenders, but tell us about the program itself. Like you have, I'm sure,
Okay.
assume you have some marketing collateral. You ultimately are looking for people that know you or know of you. Like, tell us a little bit more about the actual
Right.
program.
Sure. Yeah. All of our people that we work with, we have a relationship with. Either a neighbor, somebody we bought a house from, some sort of acquaintance.
Okay.
And yeah, basically we came up with a program, and we're going to pay X, the house is worth X, and we're looking to borrow X. And it's more of a mindset thing. We're not asking for money. We're giving them the opportunity to invest and get a high rate of return, which they are having a hard time finding somewhere else. So for us, we're not asking for money. We're giving them the opportunity to invest and earn a high rate of return. So it's what's in it for them, how we can help them, not how they can help us to buy a house.
Right.
Yeah.
We started maybe the wrong way when we originally did it. And we created a program, and it was like a PowerPoint presentation, but I printed them off and put them in a flip folio kind of thing. I mean, totally old school, no high tech, super low tech. And we go in and we're like, okay, this is our business and this is what we do. And this is the state of the market. And we talk to them about, investing with us versus investing in stocks, because that's kind of the alternative to get the similar rate. And then we're like, this is our program. We have a minimum amount. It's right now it's $20,000 minimum, and they get 8% quarterly. And we've kind of adjusted it over term. We used to have first and seconds, and we kind of got away with a second, or did away with that a little bit. But anyway.
Right. And so you say quarterly, but like, let's say you did a loan, I guess halfway through a quarter, and then you sold it halfway through the next quarter. I mean, I guess you ultimately are paying out their interest at the time you sell it, or quarterly payments, like whichever comes first type, I guess.
Exactly. Yeah.
Okay.
Yeah.
And are they typically interest only loans, or are you amortizing Yeah, because most people that want to invest with you, they don't want their principal back, right? They want it to stay working.
That's what we're finding. Yeah. They just want to keep it working. Yeah. They just like to keep it working.
Plus, it's good for you guys. You don't have to pay the principal back, and it's good for you that you don't have to build all these amortization schedules and stuff to manage short-term loans, right? I mean, what a pain. Yeah.
Yeah. Right. Yeah. It's not worth it for anybody, for the lender or for us.
Yeah. So talk about, because I know that what you guys went through, because we've talked about this before initially, is that, and I think this will resonate with a lot of people that are listening to the show, is you tend to think you're trying to get somebody to lend to you, and you're more worried about well, what rate of return do you want? And you're trying to sell them on it, instead of saying I don't know if I want to work with you or this will work for you, but here's what I've got. You either like it or you don't. But talk about that phenomenon. A lot of new investors are fearful, and they're like, well, I'm paying 12 and 2 for hard money, so I mean, I'll pay them 12%. But I guess there's probably a lot of investors can get by with paying less than they originally think, because they're comparing it to something like hard money. I mean, is that true?
Yeah, and again, it's all in the mindset. So yeah, when we first, like you said, we first made some mistakes. It was more about us needing the money instead of us being able to offer a high rate of return to our investors. So once we had that the mind shift, where it's it's a great opportunity for them to be able to invest, and they can see where it's secured. They're getting a note and a mortgage, and it's on the title insurance and the hazardous insurance. And it's a hard asset. They can drive by and look at it and all that stuff. So it was more of a mindset shift. And then us with our meeting with them, here it is. That's what we're offering. If you like it, great. If not, no big deal. We'll just go to the next one. So it's just having that the mindset that, we're offering them the opportunity.
Well, the other thing is we put ourselves in the position of the investor. So if you're investing, and when we started out, I would say it was 2009 and 10. And what are the investors? What are their fears? Well, the stock market's doing crazy things. there's been a bottoming out. A bunch of people just lost a whole bunch of money. They want something that has consistent rate of return that they can count on. And even at the time, or even now, if you have it, like Jon said, in a CD, you're getting next to nothing for interest. And so what if we could offer, our tagline is we can offer 2 to 3 times what banks offer you. Well, that sounds pretty exciting to people. They really like that. And so we decided we didn't need to necessarily do, 12 points or 12% with points, because these people we're talking to, they have no idea what hard money is.
Right.
They're not comparing themselves to hard money because they don't even know what hard money is. Right. And so when you just say, hey, I got a consistent rate of return that I can offer you every quarter without fail, and I've got this hard asset, and I'm securing you with, 30% or more equity, that sounds really good. So we just put ourselves in their position instead of looking at it from what we wanted, what they would want.
Right. Yep. And two, I think if you offer, if you're offering 15% interest, then they think it's too risky.
Too good to be true.
Too good to be true. So if they're paying that high of an interest rate, it must be really risky, even though it's still 70%. Maybe you're just buying 70% of R. But what we found too, if you pay too high of an interest rate, they think it's riskier than if it's the exact same deal and you're offering them 8% interest rate. So for whatever reason, they feel
it sounds too good to be true.
Yeah, it sounds too good to be true. So yeah.
So what is a typical rate? Like, what is the typical rate that you offer in your program?
We had been at 8, and now it's coming down to 6.
Okay.
And so yeah. So.
We tried to give some money back to people, and they didn't want to take it back. We're a little. We're just trying to adjust things a little bit, and so they're like, no, we want you to keep it, and we're like, well, we're gonna have to go down to 6. And they're like, okay. So
yeah, I mean, ultimately,
we're starting to do that.
When you raise enough money, they know you have other investors, and then they may negotiate, like you said, negotiate themselves down, right?
Right.
Yeah.
So. And we have a guy who does a lot with us, and he even told us, he's like, I think you're a little high. He's like, I don't want to go down, but I think you're a little high.
Right.
So,
but really, it's like anything. We just, we just started doing it, and then, they love their quarterly payments, and then all of a sudden, hey, I got some more money I want to invest, and then next month I got some more money I want to invest.
Or I want you to talk to my sister. I want you to talk to my neighbor. I want you to talk to my golf buddy.
All right, and we're like, we can't help everybody. We gotta
like that. You can't save the world.
Handful of people, right?
So talk a little bit about. I know that I don't think you guys don't lend as well, do you? You guys not a lender?
No, not currently.
Yeah. So I know some people that have gotten good at raising money. That's one thing that they end up doing is like, I can borrow it at 6 and then I'll lend it out. I'll become a hard money lender. So truthfully, most hard money lenders are backed by this situation, other private investors, or maybe even banks that just are kind of arbitraging that amount. So that I know that's one way that people have gotten around saying, I couldn't raise any money and then I raised way more than I needed. And so I either had to disappoint my investors, or I had to say, well, here's what I can do to keep your money busy. So that's always a thought.
That's a conversation we've been having recently. So trying to figure out.
But of course, that's a whole new business, right? I mean, you guys know that you're starting an entirely different business, and there's already not enough hours in a day, and all those things.
Exactly.
Yeah. So what are some of the mistakes What are some of the mistakes that you made? Like, if you could go do it over, that you learned that people that are listening to this, you might be able to help them avoid making that you kind of went through.
Sure. When we were first getting into it, we would. Take them to a really nice restaurant and kind of show them our program. And, everybody seemed like, really interested. And it's like, well, let me think about it and this and that. And didn't have a whole lot of luck. And then we started, instead of wasting all this money, we just maybe meet at Panera Bread and buy a cup of coffee. And for whatever reason, maybe we got more comfortable. Maybe we, presented a little bit better. But then it really started, clicking then. So it was kind of funny. We tried to, wine and dine them a little bit, take them to a really nice restaurant and show them our program or a really nice lunch. And then not much luck. And then, we just started, hey, let's get together for a cup of coffee. And then, it's just amazing. So
it's probably like the too good to be true interest rate. Like something feels off that we have to go to a nice dinner to talk about this, right? It kind of goes with that, right? Yeah.
Yeah, I think
just
maybe so.
Meet me behind the 7-Eleven and let's do this.
Right.
Well, the other thing we did with our little flip folio thing is we would go to we called up a guy that used to be one of our bankers. He used to do a line of credit and a small local bank. And we said, hey, we've got this program and we want you to look at it and tell us what's right and what's wrong because we're trying to raise money. And he knew at that time that they just weren't lending. It wasn't him. It wasn't us. They just couldn't do it. So we went to him and he said, I would do all kinds of deals with you as a bank, but I can't. He said, but I would like to do personal deals with you. We're like, okay. And so he came on board and then he referred another couple different people actually that have done a lot of business with us. So getting people's advice on it, they would be like, oh, I think I want to do that.
Yeah, it was kind of funny. We
go ahead, John.
Oh, we had the idea and we, like I said, we put together our presentation. And we had a good relationship with this banker, and we just wanted, hey, can you just, review this for us? Would you change this? Would you change that? How do you think of it? What can we add? What should we take away? And, he's a professional in the business. And so he gave us advice and no, I think it's great. And he's one of our private investors. So again, it was somebody we had an established relationship with. But yeah, it was kind of, he was very impressed with it and, knew our reputation and everything. So it worked out very nicely.
That relationship carries a lot of weight, and maybe talk a little bit about for people that are listening that they kind of get this, right? There's always this challenge when you're new. Like you guys have done hundreds of deals, so you're kind of legitimized. You have examples of hundreds of houses you've done, and I don't know your track record. I've done hundreds of houses, and we have like a spreadsheet that shows our profit on every one and what the address was and how much we put in repairs. Like it's kind of a big matrix of everything we've ever done. And there's only, we're blessed. I'm going to knock on a bunch of wood here. We've only lost money on a couple of deals, in the less than 1% of all of our deals probably, or close to that. And most people when they see that, they're kind of shocked, like, oh wow. I mean, because they don't really realize. The everyday person doesn't realize how deep we buy our houses, right? Like there's a lot of room in there for mistakes if you need them. But talk about like to the newer person that maybe hasn't done a lot of deals yet and doesn't have the ability to kind of share, here's my track record, which everybody starts there, right? Yeah.
Right.
Yeah. One thing, again, just come up with your presentation and check with your attorney and your title company and make sure that you have, everything ready to go. But then a lot of it too is just getting out of your comfort zone. Somebody, I heard one time, if you go out and you show your presentation, ask, somebody is really successful, maybe, hey, here's what I'm doing. I'd like to run this by you. Can I buy you a cup of coffee and then, run them by, show them your program and then ask them, what do they think of it? What do you like? What would you change? And I think that would be a really good way to get started and help, grow your program or start your program and stuff. So just asking for their advice, especially somebody that's well respected and that So.
And I think, with us, we have that equity in that property, built in, and we tell them, your investment's based on more than you're actually putting in. So if they're lending, let's say 100,000, but the house is worth 160, your investment of 100 is based on a value of 160. And so they kind of like that concept. And also that knowing that they're going to be the first people who get paid. Like when you lost money on deals, your investors or your bank or whoever, they still got paid, right? You're the one who lost.
They didn't even know we lost money.
Exactly. They had no idea.
Right.
And, saying that, because we'll say, we maybe didn't make money on every single deal we've ever done, but our lenders always made their money.
Right.
Having that commitment to your lender and that honesty with them.
Yeah. And if you're new, based off what John just said, sometimes when you're new, maybe you have to pay a little bit higher rate because you might be seen as a little more risky until you build out your network and things like that. It might just be that you have to pay a little bit more, but yeah.
Right.
Yeah. And you guys, you didn't, we haven't said this yet, but, one of the challenges when you use hard money or even traditional banks, if you're buying houses the way that we do, where they're heavy rehabs, is you usually have a repair draw that's in an escrow account somewhere, probably at the bank. They need to send somebody out to prove to check that the repairs were done. And then you have to request a draw and you have to pay for it and all that stuff. But with your private lenders, I assume you guys are just basically baking that into the loan up front, or how are you managing your draws? Yeah. So you guys just take possession of that money and just pay your repairs as you need it and not have to worry about repair draws and inspections and all that, right?
Absolutely.
Right. Yeah, that's one of the best things. Like you said, you don't have to deal with banks telling you when they're going to give you your own money that you're already paying interest on for draws and repairs and all that stuff. So, you get with us, we get all the money up front, and then we do the repairs. And it's we're not doing this huge paper shuffle back and forth with the bank. And so again, it goes back to that speed and ease of transaction is by far the best way to go.
For sure. Yeah. So what would you do? Let's say you had to start all over again. And I'm asking this question in the context of other people that are listening right now that maybe are interested in doing this. And they're going to start, like, how would you build your own program? Like, kind of give like a high level pitch of how you would start your own program.
Yeah. I think you need to sit down and say, what do I want to pay? What do I feel like I'm comfortable with terms? Like, we use 70%, but maybe you're like, well, I really need to use 80% because I'm new and I want to make sure there's plenty of money for me, or whatever the case might be. But you have to determine what your comfort level is and what you can present, create that. And then we kind of became, instead of real estate investors who fix and flip houses, we became real estate investors who help other people make money in real estate. Position yourself in a way that you're not asking, but that you're helping.
Right. And then to double check with your title company, with your attorney, whatever type of closing you use in your state, just ask them, make sure that you're doing everything right, so that you and your investor are protected. So that's what we did. We took it to the title company and said, hey, this is what we want to do. How does it need to be structured? So it's all hands off for us. It's their, they get everything to the title company, and the title company does what they would do just as if they got the money from a bank or a mortgage company or whatever. So
right. That's great.
So that'd be the main things to do to make sure you have all your paperwork and everything right.
Yeah. And I'll tell just people that are listening right now, like, none of us here are attorneys, so we're not giving you any legal advice,
absolutely.
but I'm going to add a link below the show here on Flip Nerd to an episode we've done with Jillian Sidoti. I don't know if you guys have met Jillian or not.
Absolutely.
But Jillian helps people raise money specifically for real estate investing. She's like the go-to person. And so I know there's a lot of regulations. I know I'm not an expert for sure, but I know a lot of them have changed over the past couple of years in favor of what you're doing and making it easier for us instead of having to jump through a bunch of as many hoops as maybe investors have in the past. But, if you're interested in this and you want to kind of stay safe, Jillian is an attorney, and this is what she does for a living. So I'll link to that show. And I think that show even has her contact information for her firm in there, so she can answer any questions you have. So pretty much everything I ever say, you have to take with a grain of salt, right? I think I'm an honest guy, but awesome. Well, that's good. Well, can you, and then do you have, you kind of said you started with a PowerPoint presentation and almost like a flip chart presentation.
Yeah.
Do you still do that, or have you kind of simplified it, or?
We still do if someone's new, but quite honestly, I don't know. It's been a year and a half or 2 years since we've had to raise private money.
Yeah, you don't have to.
No, because they keep bringing us more, and they refer their friends to us. Now, there might be a time where they're like, hey, I want you to talk to, my son or my brother or whatever. And we would bring them in and probably go through the exact same flip chart.
Yeah.
But we haven't had to, use it or, pull it out in quite some time. Like I said, we're just, all our people are trying to give us more money. And we're trying to say, hey, we can't take it right now. So
you can't use it all. Yeah. Awesome. Well, guys, is there anything that we missed out today? Is there anything that we forgot to cover?
I would say one thing, if you're new, and I mean, this is totally outside your comfort zone. I get that, making phone calls or who can I talk to? And, I talked to a gal at my gym at the time, and her husband was rehabbing this really big, I don't know, $700,000 house. And I was chatting with her about it and kind of gave her a little sneak preview of the program. And she said, you mean I wouldn't have to pick out paint and carpet and design it? Cause I hate doing that. And he makes me do it. And then the property sat on the market for too long. And she's like, we could invest with you and you could deal with all that. Oh my gosh, we totally want to talk to you. And then when we were talking to them, we said, well, who else do you know who might be interested? And they're like, well, there's a guy and he's a retired dentist. Maybe he would want to. And, you just start making phone calls and make it your focus. You want to buy houses. That's your focus. We'll make raising private money and who you can talk to a focus.
Yeah, I know. You guys know Corey Peterson, right? So he has become an expert at raising money. Now, I had him on the show a long time ago where he was not as much of an expert as he is now. But he gave a really good tip was to basically kind of prepare your presentation like you guys have, but not necessarily say to the person like, would you be interested? They just say more of like, because that might feel uncomfortable, to just basically say more of like, do you know anybody that might be interested? Can you look at this and do you know anybody that might be interested? And sometimes they'll say, well, I am, but it's just in the positioning that it might make you feel more comfortable to not be as direct. And then ultimately you might catch that person, in your net, I guess.
Right.
Yeah. And again, just tell, if it's going out and you want to show them your program, you want to get their feedback and say, hey, can I pick your brain? Can I run something by you? I'd like to get your feedback. And then, like you said, then you can, kind of opens the door and they're looking at it like, oh, wow, this is pretty good. I think this is something, that we might be interested in or whatever. So,
right.
Yeah.
Right.
So
awesome. Well, guys, thanks for joining me on the show today.
Well, thanks for having us, Mike.
Yeah. It's good to see you again.
Good to see you guys. Took a couple years for me to get you guys on here. So appreciate you being here with me today.
Well, with the kids and when you're running your own business, it's sometimes there's just not enough hours in the day all the time. So, but now we're able to finally get together and work it out. So.
Yeah,
absolutely. I get it. Well, this is great information. Thanks for joining us, and everybody that's listening today. This is episode number 361. Appreciate you being here with us today. Keep an eye on it. We do this for our elite members. If you're an elite member of Flip Nerd, you can watch the shows live as we record them and ask guests questions after the show and things like that. So if you're not an elite member right now, you can go to flipnerd.com/pricing to learn more about our elite membership. But everybody, thanks for joining us today. We're going to see you soon on another upcoming episode. Have a great day. Thanks for joining us for this episode of the flipnerd.com Investing Show. If you're not yet an elite member of Flip Nerd, you're missing out. We have tons of great training, including a new detailed master class published each month and live training webinars with experts twice a month. Plus, you'll get access to all of our archives, where we already have a growing library of master classes and other training videos. Elite members also get membership in our incredible online mastermind group, where many of the top real estate investors from across the country, including many of the hundreds of guests I've had on the show in the past, are already members. Whether you're brand new, looking to get started, or a veteran, you simply must join today. I promise you won't be disappointed. To learn more or join today, please visit flipnerd.com/lab. That's flipnerd.com/lab. See you on the next show.